Okay, so um, I'm a bit of a buy and hold investor, so that's a temperamental thing. I spend a lot of my time writing about investment trusts. I don't necessarily want to be spend too much of my personal time thinking about them. Also, I don't want to be trading in investment trusts that I'm writing about. So I tend to buy things I like and then I hang on through thick and thin. So after an overhaul a couple of years ago, I'm left with about six trusts in my SIP alongside funds, and one is a relatively new addition, and the other is a handful of, growth funds that, well, I'm waiting for a recovery. They did well, and then as interest rates and inflation rose, they've been struggling, but I'm hanging on for better times. So the new addition is AVI Global. It's a £1 billion investment trust that invests in undervalued family run holding companies or conglomerates, but also investment companies, other investment companies. And I invested last year, and I thought that'd be a good way to play the widespread discounts in the sector. Um, if you want to know about more of the long-standing holdings, the chief of those is a Scottish Mortgage, the £12 billion global trust that's in the FTSE 100. Um, that I still have conviction in its search for the best growth companies around the world, whether they're private, unlisted companies, or listed companies. It holds things like SpaceX, Spotify, Amazon. I really wish I'd taken profits, some profits, when the shares peaked in 2021 after an amazing run during the pandemic. But I didn't. That's a lesson learned. I'm holding on because I still have conviction in what it does. It's a portfolio you can't easily buy elsewhere, and it's all for a reasonable 0.35% annual charge. So I'm holding on. Do you want me to run through the other four, Nick?
Yes.
Okay, so next, another favourite of mine that's fallen on tough times, but I think will do better is Impact's environmental markets. It's a pretty unique fund in that sense, like a bit like Scottish Mortgage. You can't find that portfolio easily. It's investing around the world in companies that essentially are trying to help businesses and the world use the world's limited resources in a better way, basically. It's fallen a cropper to the macroeconomic environment and also the backlash against ESG. But I think that will pass, and I think what it does is valuable, and I still have lots of conviction. Elsewhere, there's kind of these kind of growth laggards are kind of tend to dominate my remaining list. Bailey Gifford Japan, it's not the best performing Japan investment trust at the moment by any means, but I respect what it does, and I'm hoping for better times. Henderson Smaller Companies, similarly investing in UK smaller companies. Boy, it's had a tough time, but there's an activist in the name of Saba holding a stake. The manager, long-standing manager, is retiring. There's a continuation vote later in the year. I just think, having held on for so long, something might happen. And the whole smaller company sector in the UK is well overdue a recovery. So I'm holding on there. I think that's everything. I think that just leaves Syncona. That's my most painful one, I'm afraid. That's a life sciences fund whose management has a really good track record of launching and backing new drug development companies. But the macroeconomic environment and the fact that it's been sitting on a huge cash pile since notching up an earlier success a few years ago means it's kind of dulled investment returns and made the shares less attractive, and they are trading on a wide discount, and that has affected performance. So I kind of wish I'd maybe chosen another way to play the exciting biotech market, but that's where I am at the moment, Nick.
Well, thanks very much, Gavin. Well, fingers crossed that the markets turn and the trust you hold turn along with them. It's been a pleasure speaking to you. Thanks very much indeed.
Thank you.